is they have a lot of problems with risk. So please do yourself a favor and don't think that if you demo trade for 3 months and are profitable, that you're going to go out and replicate those same results, because it's just not the case. When there's no money on the line, you're going to take trades that you'd never take with real money. You're going to hold on to winners forever. And this is why you see people with millions of dollars in demo but can't make $1 in the live market, because your brain knows it's fake. You're not going to get the real experience of what it feels like when you actually have skin in the game. But that does not mean that you should just jump into the market and take huge risks either. What you should do is take a very small amount of risk and trade extremely responsibly. And even if it's just a couple dollars, you need to know what it feels like to have money on the line. Now, here's what I recommend. Get a prop firm account. Now, for those of you who don't know what that is, a prop firm is where you can buy a challenge for $25 or higher, but I recommend starting small. And you can get access to trade large accounts like a $25,000 account. And then you have to hit a certain profit target without losing a set amount of money. And if you do lose that much money, then you just reset the account. But if you hit the profit target, then you're able to trade with a lot larger capital. Now, on most markets, you can't even trade at all with $25, much less be able to actually, go out and make any money. But with a prop firm account, you can put a very small amount of money in like this, say literally $25, and then you can go out and practice with this $25,000 account. Now, I have a partnership with Apex, which is the largest futures prop firm. I'll leave a link down in the description where you can get 80% off of challenges. But guys, for real, get the cheapest challenge if you are a beginner. Do not try to skip the line and go all the way up to the big boy accounts, because it will mess with your head. Remember, the goal of this is to practice proper risk management and treat it as if it was your own money. But whenever you're learning and can do this for $25 instead of risking thousands of dollars of your own money, that's obviously a much better situation. But that doesn't mean that you just go in here and start acting stupid. The whole goal of this is to be able to build a foundation for yourself. That way you can scale up and one day make real money. Now, the most important part of any of this is that you absolutely must track every single trade that you take in some kind of trade journaling software. Now, at minimum, you need to track the basics. When you entered the trade, why you entered, which strategy you used, what was your stop loss, your take profit, and most importantly, the outcome of the trade. Now, you also want to track a lot of the deeper stuff. What days are your most profitable days? What markets work best for you? You need to track your sleep, track your mood. All of these things come into play with your trading. Your best bet is to track everything you can, because you want to find correlations, and also doing this is just going to make you a much more dialed in and aware person. Remember that everybody is different. There is no one size fits all when it comes to this stuff, and you need to figure out what conditions make you perform best. There are a ton of different softwares that you can use to track this, where you don't even have to enter it in. It's all automated. Now, we actually developed our very own proprietary software for trade journaling, and what makes it powerful is that we're actually able to review the data and the habits of every single trader on my team. So we're constantly looking over their performance metrics and helping them identify patterns that they might miss on their own with a normal journaling software. But for getting started, there are tons of free options that will do just fine. The key is just getting started with tracking something, because without this data, you're just guessing about what works and what doesn't. And remember, your goal here is not even to make money. It's just to get real market experience while keeping your risk very small until you prove that your strategy works and that you can profitably execute it, and then document everything along the way that's going to help you get there. But I want to be very, very clear. Nothing that we talked about today will mean anything for you, and you will get destroyed if you don't avoid these 5 common mistakes that all traders make. Mistake number 1 is strategy hopping. And this is where most traders get stuck in this endless loop. You'll learn one strategy, take a few losses, and then immediately think that the strategy doesn't work and jump to something else. Most traders do not give anything enough time to actually prove itself, because you need at least 100 trades with proper execution before you can even judge if a strategy works or not. And most traders never even get past 20 trades before they're looking for the next shiny object here on YouTube or whatever social media platform. Now, mistake number 2 is traders don't have position sizing rules. They risk different amounts on every trade based on how confident they feel. And this is gambling, not trading. Professional traders risk consistently, regardless of how good the setup looks. Without consistent position sizing, literally one bad trade could wipe out weeks of good ones. Now, mistake number 3 is emotional trading after losses. The tale as old as time. You take a loss and immediately want to fix it and get the money back. So you take the next trade with double the size, or maybe you force trades that aren't really there, or maybe you enter the market early. And look, the market does not owe you anything. Every trade is independent of the last one, and trying to get even is the fastest way to blow up your account and stay unprofitable. Mistake number 4 is focusing on wins or money instead of your process. You can celebrate whenever you're right and beat yourself up when you're wrong, but remember that being right doesn't actually mean anything if it's just on one trade and you weren't following your process. What matters is following your rules consistently over hundreds of trades, because you can be right even 40% of the time and still make money if you're managing your risk properly. So don't ever get excited just based on one winning day. Don't ever get down in the dips over one losing day. Now, mistake number 5 is whenever traders don't track their trades. And they take a bunch of different trades throughout the day, and you ask them at the end of the day, they don't even know what they did. And without this data, you are just hoping and guessing, especially when you're a total beginner. You need to know exactly which setups are most profitable for you, what times of day you trade the best, what your actual win rate is, what your most profitable day is. All this stuff's important. And most traders would think that they know this stuff and maybe could give you some answer, but when they actually track it, they figure out that they were completely wrong about their own performance. And these are the same people who say that they're trying extremely hard and all this stuff, when in reality, most people who trade don't take this serious. And that's exactly why, for a very close inner circle of traders, I personally work with them to solve these exact problems. Look at everything that we just covered today in a pretty short amount of time. You now understand why you need to focus on the process instead of chasing money. You have a clear roadmap for learning trading the right way. You learned market fundamentals, how to read candlesticks and support and resistance. You know why you need to focus on just one strategy instead of jumping around. And I taught you an actual mechanical strategy that has been tested over thousands of trades that you can start using immediately. You understand now that trading psychology is just having conviction in your system, and you know how to transition to live trading from starting as a total beginner. You learn how important journaling was and the 5 most common mistakes that destroy most traders. And that's a complete education alone.